Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday the 21st of March. Now, markets have come into the new trading week slightly cautious, nothing too significant in terms of direction. There's not been a great deal of development in terms of positive or overly negative over the weekend from the war in Ukraine. It seemed as though that the market view of these peace talks that are ongoing seems to be dragging a little bit. The positive moves that we saw through markets last week were really predicated on the back of those peace talks, but there are certainly question marks as to how the peace talks will actually develop in the coming weeks and whether it's going to be just seen as a smokescreen. But at the moment, sentiment is a little bit cautious this morning. We've seen a dollar rebound. We've also seen that the oil price is starting to climb back higher again. That generally tends to be seen as a negative for market sentiment. And we've also got yield curves which continue to flatten off. So generally speaking, it's not all that positive, but not decisively negative either. Now, in terms of data points today, nothing really on the agenda. We do have some Fed speakers throughout this week, and we've got Raphael Bostic today. Might be worth watching out for there. He's a hawk on the committee. So the charts I'm looking out for, I've got the euro-dollar chart, which has continued to recover. It's in an uptrend phase over the past couple of weeks. Will that move break through a key resistance? Also looking at the oil price, which is now starting to climb back higher. Look at the technical implications of that, and also looking at the DAX, which is still in a recovery, but it is also underneath a key level of resistance. So let's have a look. So onto the Infinox MT5 platform, and starting with euro-dollar, we can see this recovery trend that we've had in the last couple of weeks continues to move higher actually, but just stalled underneath the key resistance area that starts to come back in 111.20 big figure. As old key support becomes new resistance, and that seems to be the case in the last couple of weeks. But it is still in this uptrend, but I'd still say that looking at these momentum indicators, the RSI, it's just basically unwound back towards that 50 mark. That tends to be seen in a bear market recovery. So that's the key question here. Can euro get through that 11.20 level? RSI above 50 would be a positive signal, but it isn't there yet. Going on to the 4-hour chart, you can see again the recovery trend, but you do have on the 4-hour chart a more positive looking momentum signal here on the RSI. But obviously it has been dragged back over the past sort of day or so, couple of sessions, and it needs to now start to build support. You've got that reaction low that we saw on Friday at around 10 big figures. So 10 big figures, see a bit of a line in the sand here for euro-dollar. If that gets broken, that also breaks the uptrend as well. So that's something to look out for. But that resistance at 11.20 needs to be breached. Onto the oil chart. Well, we've got the daily oil chart here, obviously accelerated higher at the end of February, pulled back equally as strongly into March, but is now starting to find support, find buyers again, pushing higher. Strong bull candle on Thursday, another positive session on Friday, and into today's session, it's around about 3% higher again. So it just looks as though that this one is starting to swing back higher again. Momentum on RSI and the daily higher. Now, this reaction high, the first real lower high at 115.55 is this candle here. See it on the 4-hour chart as this level of resistance that we've got overhead that comes in here. This is the first real test of this recovery. Does it get through that level of resistance? If it does, then that really does look as though it's swinging back higher again and holding that recovery. And you've got the 4-hour chart momentum, which is already positive. Support at 106.60. You've got a basis of support that comes in around 110.80, 106.60 to 110.80 basis of support now. But yeah, that market looks as though it's going to be coming up to test that resistance at 115.55. Finally, on German DAX, well, German DAX really did soar higher over the last couple of weeks and really accelerated that move last week, which was positive, obviously breaking through the resistance at 14,100 area, and it's interesting that it found support at that level on Friday and then rebounded again. Look on the 4-hour chart, you can see that nice breakout basis of support around that 14,100 level, but essentially it's consolidating now. It needs to continue higher. It's sort of fallen back from that 14,550 area, and obviously what we do have our overhead is 14.8, which is a really strong level of resistance, which market really does need to, that would be the pivot line in the medium term chart that really does need to get through to really drive the recovery higher once more and turn into a positive medium term outlook rather than just a bear market rally within this selling phase. Thank you for watching. I hope you found that informative for your trading. I'll be back on Wednesday where I'll be looking ahead to the flash PMI data, which is the main points of the week. So I'll leave you with the Infonox support and resistance table, and I'll speak to you then. Thank you very much.